And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Hello, traders. Welcome to Coach's Playbook for Tuesday, February 15th. I'm Jack Pelzer, joined by Dan Hodgman, Mick Aronimo, and Mr. John Hoagland. Today, it is Halloween in February because we are talking about the Death Cross. Very ominous name, so let's start it with some levity. Mick, do you have a trader shout out first today?
I do. Shout out to Armando Hierro, up a little over $3,000 trading the NASDAQ this morning. So awesome job.
Great job. I think a constant theme that we've been trying to nail this year in the Coach's Playbook has been the idea of looking at longer term patterns in trading to take, bigger trades. So we've looked at some longer term trends in the charts, and I was noticing today that we're approaching kind of maybe a big one, and it's the idea of the death cross, which is the inverse of the golden cross. Now, if you don't know what these are, it's simply a difference between recent momentum and longer term momentum. Usually it is displayed by the intersection of the 200-day and 50-day moving averages. So today, Dan, can I share a chart?
Absolutely.
I've been told our technical meister here has to prepare a few things for us to dive into this.
I'm ready when you are.
All right. So I'm hitting share screen here to go and take a look at what we have here. Is a daily chart of the NQ going back quite a bit here. If we zoom up close here, the reason we're talking about the approaching death cross is because the red line here is the 200-day moving average. The blue line is the 50-day moving average. And we're having an update today, but given where this is hanging out, and given that 50 days ago, these are sort of the days that are dropping out of the average, unless something changes, this blue line is going to keep creeping lower faster than this one can change, and then we'll have a death cross. Now, it's a very famous indicator of longer-term bearish trends when it goes, the 50-day goes through the 200-day, and the opposite is true with the golden cross. So before we get kind of into this further, I don't want to do all the talking here. So, Hoag, is this something that you look at in general? I think regardless of how you trade, this is something that if it happens, you need to know because a lot of other people will be looking at it.
Yeah, most certainly. I mean, it's something you have to be aware of. The last time we had a death cross in the NASDAQ was 2 years ago, March. And by the time that happened, the bottom was already in and we had a golden cross immediately thereafter.
Yeah, right there in the chart.
Mm-hmm.
One thing I'd like to add, that is a very unusual one and probably a good time, easy to say in hindsight, but not a great time to trade with that, because what we had here is that was right after the COVID puke right here. All right. So here's the bottom tick where, Jay Powell came in and said, we're going to do what it takes. And then it's just raging since then, and actually has never stopped. It's just been raging since then. So you need to look in the context of every trade. This death cross here, given what was going on into it, that's not the time just to be like, oh, the moving averages crossed. Like, things were radically different between now. If it had crossed like I don't know, here or something, if it was still puking down, then maybe you're onto something. But
the VIX made new highs, like all-time highs at that time, didn't it?
Yeah, it did.
On the way up. Yeah,
when the market sold off in the the bull market.
Oh yes, I like.
Well, yeah, the VIX made new highs.
Yes,
during that time.
So to go back, as long as we're looking at the daily chart, so historic examples, pretty much all of with the S&P 500 version of this, pretty much every recession has been foretold by this, which is kind of, it makes perfect sense because if you have a recession or a market downturn, at some point it's going to happen. The 50 day is going to have to go through the 200 day, right? So if you go back further, though, you see a better example of like when something like this works. You know, if you go back to 2018 here, November, this was the old Christmas puke that everyone was confused by. But here is like maybe a better example of when it sort of works out. And actually on the other side, it looks kind of interesting too. Overall, you can see that for the vast majority of the time, because we've been in this just huge uptrend, that 50 day has just been persistently out ahead of the 200 days since May of 2020. So that is resilience. Hogue, was there anything else you wanted to add there?
Yeah, one of the things is, you know, if we kind of remain in the range that we're in now over a period of time, that's going to be, I think, a more significant death cross, because you know when that happened during COVID, it was such a V bottom. By the time the bottom was in, the death cross hadn't even crossed yet. But we're spending time here, and you know, when we're looking at the auction process and we're looking at acceptance or rejection, time is a major factor of acceptance. And if we start to accept lower pricing and we get the death cross, then I think we may see some decent opportunity to the downside off of this death cross.
So Dan, I'll send it over to you next, but the reason I'm zooming out now is to kind of show the larger context here. Is we've had a bit of a correction, but we've had a hell of a run in the meantime. And Hogue's right. Things were flying around. I would have expected anything right now. I could see it going lower here. It's hard for me in the very short term, say everything is hunky-dory suddenly with Russia. We're all friends. In the short term, things will probably explode higher. But I hesitate to see what's going to send us. We're in a very different situation than down here, where there's just an explosive run off it. Like, I'm not sure what would cause an explosive move to the upside off this.
Yeah, I mean, first off, we're in a totally different situation than we were back in 2020, right? In 2020, we had this pandemic looming. We were talking about shutdowns and just kind of, we knew the economy was going to slow. We all accepted that. We knew that was exactly what was going to happen. Right now, it's a lot of questionable things, right? You talk about Russia, which is important, and what's going on there. And that can have, if there's that invasion or something goes on there, that can really send things into a tizzy in a sense. You got fight over metals, natural gas and crude oil. So you got a lot going on. This is a little bit different situation than we were back in 2020. But what I want to talk about, what I think is more important here with a lot of our traders, we're talking day trading, right? And just because that happens, that's not your job as a day trader to jump in and sell. No. Just because that happens. Keep that in mind. Hey, we're starting to see the death crosses happening here. There may be some really great short opportunities. Also, I got to kind of be cautious and protect my risk if I decide to take that long. So I think that's really what we want to think about here. We're setting up more similar like we saw back in November, October of 2018 when we led into the sell-off on Christmas Eve that day. And that's what I think we're setting up here a little bit more for, but we're still going to get updates. You're still going to get opportunity for the long side. When you start to see this death cross coming in, that's where you want to think about, okay, well, what's my risk on the downside? How am I protecting myself? And your job is not just to come in and say, hey, they crossed, sell, 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 sell. You're not carrying large positions. You're not getting yourself protected in that sense. Your job is to day trade just like you would on an up day, right? Let's flip that chart upside down and look at it the same way we have looked at it for the last 10 years. Every time it's creeping higher, right? You look for those pullbacks, you buy it, you buy in the pullbacks. That's what we're going to look here on this time. We're going to look for those little bit of strength. We're going to sell that strength and let that market kind of continue to take it down. But if you find long opportunity and market's still set up the same way they always have, look for those opportunities. Don't deviate too much from the plan unless your plan is buy the open, sell the close. If that's how you're going to trade, I think you're going to struggle here. But if you kind of continue trading with what you've been working on for the last couple of years, I think you're going to be okay here. But it's important to note that higher time frame. When you look at that higher time frame, the sign of your day trading hat, you're going to change out hats and you're going to start to look for bigger opportunity, bigger investments. Okay, wait for this sell-off to really happen. Sell-offs are where we get to start to make some real money in the long term. That's where that wealth idea comes from. So then you get to kind of flip pages here. And that's for me where I get really, really excited when we saw that sell-off in 2020, opportunities for buying longer term stuff. And so those are the two ways to look at this. But I think from in this perspective here as day traders, it's going to be important to really continue to trade your strategy and don't let this impending death cross deviate you or force you to think, hey, I just have to sell everything. Continue to trade what this market's showing you. Today, prime example, we got a nice up day so far. We saw it in the last couple of weeks. We've seen some nice upticks, even though we're starting to see this market turn down.
Yeah, and I'm gonna kick it over to Mick next because you deal the most with our traders and their habits. I was gonna say more that I think one of the maybe pitfalls that I've seen a lot of our traders fall into is they have a very deeply ingrained bias to one side or the other. That seems to see some. It seems when people really get dinged are on the big down days. I think it's more that Dan's right. You have to look at each trade as a day trader, but I think it's something they should be aware of as far as not blindly just catching the knife on the way down on some of these days. Is there anything you'd like to add about that?
Yeah, I mean, I couldn't agree with you more, Jack. We've been in a bull market for such a long time. We see people that, if you've been working the long side in a bull market, odds are you're going to be, depending on timing, you're going to be better off than someone who's selling in a bull market. So yeah, as you continue working the long side, whether it's day trading or longer term position trading, when there is a big flush to the downside, that's where traders get hurt if they don't have, their risk managed properly. This death cross, it is, to me, it's a tool. It's a tool that is supposed to open your eyes to, we might have a change in, the theme here. This bull market could in the short term turn into a bear market. So it's really, the death cross is, I view it as like, hey, this needs to be on your radar now. If you've been working the long side, you now need to be aware that we might, for the near future, we might not want to be working the long side. Obviously, you can always make money in either direction, but it kind of, tells you, keep an eye out for this. We might be turning down. And when you are in a bull market and you get the death cross, to really define that this bull market has turned into a short-term bear market, you need to see lower highs being put in on the daily chart. So that's something traders should keep an eye out for. I really like the point that Danny made. For a day trader, this should be something you're aware of, but not something you're making intraday trading decisions off of, because the death cross is 50% of the 50-day simple moving average crossing the 200-day. You're looking at a data point that goes back 200 days. You can't use that for intraday trading. So that's probably the most important thing I want to talk about, because in a world where information moves so quickly, you get tweets, you hear about this death cross. And I know that a lot of, newer traders, they see headlines, they see news, and they think that these technicals or even fundamentals are going to play out in the short term. Oh my gosh, we got a death cross. I got to short this market. When in reality, you need to be very careful of just, doing that. You still have to manage the money and find good trade location. I think you guys really did a good job covering this, but I think that's, what I really wanted to add and point out. It's a heads up. You still have to keep your head on a swivel, just like you do any other day during these trading sessions.
Yeah.
I want to add one thing too, just for clarity. This is an active chart too, right? So if we're looking at the March contract, your 200 moving average isn't going to be a great thing to.
Oh, good point.
Some charts won't even show that. It's only going to show on an active chart. And then also this is these are simple moving averages, correct, Jack?
Yes.
Yeah. Awesome. Thank you.
Yeah. And I think that, as Hoagland has often preached, the markets are all psychological. They're all how people are feeling. So this will be the first time. The reason why I'll be watching this closely is this will kind of be the first time since this current bull market has been in effect that we're going to see things just analytically having slowed down. And that's why I don't, if you saw me moving around, like this is my main sort of like watch list. There's nothing too surprising on there, but you'll notice that like below it, I have a whole lot of like meme stocks listed here. And because that's the sort of stuff that honestly here we go. Some of them aren't. But when you look at sentiment of these companies, that's kind of the ultimate how exuberant are people is kind of how I'm looking at it that way. So like that's why I keep an eye on, say, Bitcoin or the meme stocks, because I think those are most sensitive to a change in sentiment. So a lot of data to look at, guys. That is the life of a trader. So
Always try and simplify it wherever you can.
Yes, absolutely. There's probably a good indicator. I think last week I went through and showed like thousands of indicators. We could probably make a good one about something with the meme stocks.
I bet you there's something there.
Oh, there's probably 100, but there probably is something there, like a VIX of mean or like a momentum of them or some sort of index. I'm sure those exist, but it'd be fun to take a look at. So does anybody have any parting thoughts here, or are we cool with where we are?
I think we're good. I think at the end of the day, you can't reiterate this enough. It's something you need to know. But like Mick was saying, like I was saying, you can't make your short time frame trade decisions off of data points that are like this. You got to pay attention to it. And I think that's where the hats can switch. And then your investment hat, your long-term stuff, you can start thinking about that. But remember, they're not the same hat. They're two completely different things. If you're day trading, that's one thing. And you don't mix the two. One is specific long-term. One is going to be more specific to the short term.
Oh, my mouse is going insane right now. Sorry, guys. What I was trying to do here is I was just curious to just look at Bitcoin really quick to see how that's, with the same things we talked about. Well, sorry, guys, my mouse is clicking on other things there. So we'll just leave that for now. I have no control of my computer. The machines are taking over. This is your warning. Head for the woods. So with that, Dan, do you have a quote for us?
Yeah, I do. Let me grab it. Here we go.
I'm gonna stop sharing, by the way. This you know what? It might be that my cord's hitting. I've had so much problem with this sleek Apple mouse that just come on,
Wow.
make it functional.
It worked. It worked for what we needed. Today's quote comes from William Feather. One of the funny things about the stock market is that every time one person buys, another person sells, and both think they're astute. So I think it's important to think about that. There's always someone on the other side, no matter where the markets are going. Be cautious, be smart about it, and protect yourself.
Yeah. The person on the other side thinks you're wrong. Just the nature of things. So with that, Hogue, you want to sign us off today?
Sure. When we're looking at the death cross or the golden cross, think about it as a context of the market. You get the death cross, just like these guys were saying. It's not a close your eyes and sell. It's an opportunity to change your hypothesis about the markets. If you're in a market that's moving higher over time and you're buying weakness, it's time to start thinking about selling strength when you get to the death cross. Of course, each situation is different. If we have this death cross through the attrition of range bound activity in our equities, with everything that's going on with inflation and rates going up, we could see a nice little pullback. So I'll be keeping an eye on it. We'll be talking about it on forecasts and recaps, and I'm sure on more coaches playbooks. So trade safe. Make sure you use a stop, and we'll see you next time.